Good morning and welcome to AI Media Technologies Limited full year results presentation for the financial year 21. From the company today, we have Tony Abrahams, the co-founder and CEO, and John Bird, the CFO. Tony and John will run through a brief presentation followed by a Q&A segment, which you can submit via the Q&A button at the bottom of the screen. I'll now hand it over to Tony to get started. Thanks very much.
Thanks, Simon, and thanks everyone for joining. It's a great pleasure to share with you some great results of our first year as a listed company. Of course, our mission is to make the world's content accessible for everyone. And with our recent EEG acquisition, we really are a global one-stop shop for live and recorded captioning, transcription, and translation. And it's a really exciting time for us, and we're really looking forward to FY22. At a glance, we've got three key product lines, being live broadcast, live enterprise, and recorded media. Established in 2003, we have invested over $50 million in R&D since 2009 on our world-beating AI live product set. We've also invested $48 million in 3 acquisitions since listing. We have 2,200 global customers, increasingly diversified in terms of revenue category, customer and region, and over 3,000 skilled contractors right around the world. We have operations in every part of the planet, Asia Pacific, North America, and Europe, Middle East, and Africa. And what you can see really is in these results that it's very much a story of two halves. The first half, we absolutely invested additional amounts in our technology and product portfolio that we are absolutely starting to see the benefits of in a real shift, and we'll run through that, and JB will give a bit further detail as we move through it. Obviously, with significant acceleration in Q4 of FY21, putting us in a great position for FY22. So the key highlights, delighted we've exceeded our prospectus forecasts, and that's without the contributions of the 3 US-based acquisitions. We increased our gross margin throughout FY21, more than what we said we would do in the prospectus forecast. And again, really Q4 was where we saw that huge uplift. We launched some breakthrough products, the fully automated Lexi, semi-automated Smart Lexi SaaS products, which complement our premium AI live services offering. And we've also acquired EEG's scalable SaaS live streaming product range, Alta and Falcon. And importantly, also, it's the iCAP cloud platform and network, across which over 6 million minutes a month are carried, almost all of that being at the moment in US broadcast. And what we're looking to do is significantly expand the scope of that iCAP cloud platform into enterprise in the United States and then globally as well. Really key, we have delivered captions for the Tokyo Olympics, both in the United States and in Australia. In Australia, obviously, for Channel 7, a long-time customer of ours. But the really interesting thing is that we provided this semi-automated Smart Lexi SaaS product on NBC's Peacock platform for up to 60 different channels. And the feedback has been fantastic. So we're very excited to launch that Smart Lexi product on Sky News next month. And it's also providing us great opportunities to engage with customers to deliver a product that's effectively half the price of our premium product, and done with far less human involvement, and really leveraging the smarts of the artificial intelligence and machine learning that we have built up that flywheel over more than a decade. We've significantly broadened our customer base with new contracts, including Al Jazeera, the UK Parliament, and others. And in terms of capital raise, we completed the IPO in September, and then a further $40 million to fund the acquisition of EEG. In terms of Key highlights, 49.2 million total revenue, which was 5.4 million ahead of the prospectus forecast, which included the acquisitions, but if you strip those out, we still beat that target. Massive increase in captioned minutes, and we're expecting that trend to continue as we deliver more with Lexi and Smart Lexi. The 3 successful acquisitions, Caption Access and Caption IT, were the bolt-on acquisitions in January, and the transformative acquisition of EEG in May. Gross profit was 20.4 million, again 2.3 million ahead of the prospectus forecast, and gross margin really happily up to 42% statutory for the year. But really, if we look at the pro forma on that, and you can see that in the annual report, we're already at 50%. Finishing the year on a pro forma basis. So really starting to see that seismic shift in the way that we deliver our technology products. And a much stronger balance sheet than we were in this time last year, with 17.9 million cash on the balance sheet and no company debt. So what we can offer now is an extremely simple offering. We can deliver live and recorded captions in any language and from any language to any language, streamed in any format to any device. And this is really the combination of the EEG components, which provided the streaming, and our legacy AI media translation, transcription, and captioning products. In terms of the tiers, we can offer it in terms of premium, semi-automated, and automated. Again, the EEG component gave us the automated service of Lexi, which we were able to overlay Smart Lexi and Premium to give that true one-stop shop. And the market is $20 billion in languaging and growing, and we are seeing increasing consolidation in that market as the technology intensity grows. The pivotal acquisition of EEG in May allowed us to really deliver that true one-stop shop. The really exciting thing about EEG is its incredible market penetration in the United States. In fact, its penetration is so ubiquitous in US broadcast that the ratings agency Nielsen gathers their data from EEG's ICAP network. So there's no ratings broadcaster that's effectively not on the EEG platform. The exciting thing about the EEG platform is that it works just as well outside of broadcast and just as well outside of the United States. But historically, EEG and the business there has been very much focused on the United States. It's a 40-year-old business, and right up until the digital transformation of broadcasting, the United States had very different broadcasting standards to those in Europe, Australia, and around the world. They were delivering with NTSC, we were delivering with PAL. But the work that the EEG team have done over the last 10 years has been fantastic to really uplift that technology so that it is digital and global. And we will be utilizing our global sales teams to really sell this one-stop shop led by this EEG ICAP platform. In terms of how that looks, effectively, we have the hardware encoders on which the ICAP network feeds in. Now, those encoders can be physical or they can be virtualized. And in fact, a big trend in the EEG business has been to virtualize more and more of that hardware. And then what that ICAP network does is it connects captions, be they premium, semi-automated, or automated, across that infrastructure, delivering it with confidence for customers around the world. In terms of the operational performance, you can see that transformational change there with the captioned minutes up to 16.8 million, which is an increase on a pro forma basis of 55%. On a statutory basis, it's much higher because we only included 2 months of the ACS acquisition in the FY20 statutory results. The revenue per minute's come down, which is not a problem because it actually reflects the increasing focus on those less expensive automated and semi-automated products. And you can see that therefore the margin is very much protected despite that spin down in terms of quality. Really exciting for us is that our five SaaS products in the month of June already accounted for 8% of total revenue, and we are expecting that to continue to grow quite significantly. A smattering of some of our key customer wins in FY21 from all around the world and in a series of different verticals. This has been a story of offshore growth. Our Australian New Zealand business is reasonably mature. We've got a 65% market share already in the Australian broadcast industry, and we were impacted by less live sport and events happening during COVID. This was more than made up for, though, by the growth fully organic in the rest of world number. So an increase of very, very significant increase there, which we're seeing continue. And that organic growth is being supercharged effectively by this one-stop shop offering of any quality level for captioning, transcription and translation. The North American increase, very, very significant. Part of that is organic, and obviously part of that is also through those 4 acquisitions. And so we can see now that we've gone from very much being an Australian company with some export sales to truly being a global business. In terms of the customer mix analysis, we have continued our very significant diversification of our customer base while retaining over 95% of our strategic customers, so defined as a customer that spends more than $25,000 a year with us. And as an indication, this time last year, the top 3 customers accounted for 45% of our revenue, and today our largest customer is less than 10% of the total. Again, the transformation can be seen here in terms of the impact of the number of minutes delivered across the AI media platform. So from a base of 800,000 minutes in June of 2020, we increased that on an organic basis to 900,000 minutes in the month of June 2021. And on top of that, we are offering another 1 million minutes a month with Lexi alone in US broadcasters. But really interesting and exciting for us is the 5.1 million minutes on top of that that are carried across the ICAP network. A lot of that we're currently not monetizing, and that's because of the EEG business model prior to the acquisition. But as we continue to improve that network and we continue to invest in that network, we will expect some monetization opportunities from that in the future as well. In terms of financial performance, I'll cover the revenue growth and I'll hand over to JB to lead through the details of the next few slides. But it's an 87% growth in reported currency. That included a negative currency impact of $600,000. That revenue growth included $4.1 million in the acquisitions. So that's 6 months of the Caption Access and Caption IT businesses and just 2 months of the EEG business. And the remainder of the revenue growth was organic, but also, again, when we count 12 months of the ACS acquisition rather than 2. And so they're the components of growth. If you look at that 49.2, again, on a pro forma basis, we're looking at a $60 million number at a 50% gross margin. JB, I'll hand over to you.
Thanks, Tony, and welcome everybody. Tony, of course, has stolen all of the highlights, but just to put into perspective, our revenue for the full year was made up of 2 significant halves, but the second half was equivalent to the prior full year's revenue. So that gives you an idea on how much we're growing in the second half. And we expect that growth to continue. The second half numbers only include the contribution, as I'll explain later, from EEG for 2 months and the other acquisitions for 6 months. Overall, we continue to see the margin grow significantly. Part of this is the investment in technology and moving ACS, one of the early acquisitions that was done in May 2020, moving it across into more advanced platform technologies. We've managed to do all of this keeping a lid on expenses, which is quite an achievement for a growing organization. It doesn't mean expenses aren't growing, but when we actually strip out some of those one-off costs, we're doing incredible amount of growth, keeping all of the costs relatively well controlled. So that's contributing to our bottom line, where, once again, the story of 2 halves. We actually, in the second half, on a normalized basis, we made a positive contribution. But the EBITDA went from $7 million negative to $1.6 million negative in the second half, contributing to the $8.7 million. So we're really seeing the transformation occur in the second half. And that of course, we expect to continue, and in fact, increase quite dramatically over the ensuing years as we move through the integration of EEG and all of the other prior acquisitions. Tony, if you could, next slide. As I mentioned, and Tony alluded to the fact that there is a contribution from the 2 acquisitions. EEG, we gave a significant amount of disclosure when we were acquiring them, but they turned over about 2.2 million in the current year. Now that is only May and June, and neither month was unusual, and we expect that would be part of the ongoing growth of that business. The reality is, though, the integration and the leverage of that revenue is very significant for the entire organization. So it is seen as an incredibly important part of the growth engine of the AI Media Group. As I note there, we had about $5.6 million of one-off adjustments, and they were largely due to the acquisition or the acquisitions and the IPO costs. And when we take those out, we actually came in at $4.4 million EBITDA, which is, I think it's significantly better than the Prospectus forecast, which was 4.8. Now that was partly driven, as I mentioned, by the revenue growth, and of course, we've managed to grow the business, make the acquisitions, and continue holding expenses at a reasonable level. Tony? This is where accountants get all excited, and some of you will see the first number is the most important number. We have cash. We have an unleveraged balance sheet, so it's not even under-leveraged. At 17.9 million of cash, and throwing off a significant cash in the ensuing year, we have a position where we can be very opportunistic, and that's opportunistic for both investment in technology and other investments. Most importantly, though, the assets, or the net assets, is incredibly significant, and that will very much form a great base for the next 12 months, but I think longer term. Tony? As I mentioned, the cash has significantly increased. We started the year with barely enough and went through what was a significant IPO, and that was very successful. It was 6 or 7 times oversubscribed. In the 6 months post the IPO, that's when we actually started to not only further invest in the technology, and a lot of that occurred prior to December, but then we also did the further capital raise of $40 million, which was substantially to not only improve the balance sheet, but it was to acquire EEG. And all of that, we ended the year with 17.9. We have a commitment to the vendor based on exceeding budget of a further $5.3 million payment, maximum payment at this point in Australian dollars, 4 million US. That will probably, I would anticipate that will be more than covered by the growth of the business. So we're in a very good position from a cash perspective. Tony?
Thanks, JB. So moving on to Outlook. Key drivers of growth remain the same as the ones we've put into the prospectus and reported on since then. It's that proprietary technology, which now includes that great EEG live streaming technology, as well as those SaaS products. Security-led sales, which is really, really critical for a lot of the great customers that we've switched on in the last 12 months. Integrated systems, and this remains a key focus of product development for us, making it easier for people to order AI Media's services and products with a single click, and then having that integrated within the enterprise grade systems of our customers. Multilingual, so we will be, we had a fantastic launch of our live multilingual product at the end of last year, and we're in the process of layering that onto Lexi and Smart Lexi, which will be Lexi and Smart Lexi Translate options, and then the global footprint. And so increasingly it's then taking that fantastic EEG product suite global. And again, this is a key reason why EEG chose to sell the business to AI Media, and also why the EEG vendor took an investment of 14.6 million AI Media shares in that transaction. We are expecting to see an increasing share of SaaS revenue from Lexi and Smart Lexi, and the proof point of the NBC broadcast of the Olympics really can't be understated. The important thing to note is that often our customers need all three. They want Lexi where it can be done effectively, where you need Smart Lexi, they will go for Smart Lexi, and where you still need that human curated service, they will choose that premium AI Live. No one else in the market can offer that one-stop shop, and that really has been supercharging the pipeline in the last couple of months. In terms of exactly what that one-stop shop means and how it applies based on particular customers, particular confidence levels and target markets, is there on that slide, and I can let you guys reflect on that at your leisure. And the key thing we're looking to do is really on this slide. As I said, 8% of June's revenue is already SaaS. And that is with those 5 SaaS products, and we are looking to significantly increase the size of that in the coming months and years, to the point where our internal management forecasts see that 76% services number dropping back to 50% by the end of FY23 on what will obviously be a much bigger total. In terms of the revenues to be expected from those revenue lines, the services revenue will deliver, has delivered in FY21 a margin of greater than 40%. We would expect that margin to continue to improve as we bring on further technology and product automation. The SaaS revenue has a margin obviously much higher than that, being 75%, and the hardware revenue also has a margin of greater than 70%, which has really enabled us to get to that 50% gross margin on a pro forma basis at the end of the year, which we're obviously expecting to grow in FY22 and FY23. So in terms of the outlook, it's a large and growing market supported both by regulatory and commercial tailwinds. And it's those commercial tailwinds, I would say, that have overtaken the regulatory tailwinds in the last 12 months. We've got an established global presence with local sales teams and supported by a very experienced board. An industry-leading platform which provides a truly scalable business model. A large and increasingly diverse customer base with repeating revenue, strong revenue growth, growing margins, and positive EBITDA and cash flow. transformative SaaS product suite, and this one-stop shop offering, which is driving growth at higher margins in FY22 and beyond. And of course, being cash flow positive with a strong balance sheet, we are well positioned for growth moving forwards. And I'd like to thank many of you on the call for your support and investment in this first year. And we look forward to an even better FY22 and FY23. So further information, please feel free to reach out to Sue anytime. And I might hand back over now to Simon for questions.
Great, thanks, Tony. And thanks, John. First question's from Nick Harris at Morgans. Hi, team. I appreciate you haven't provided any guidance for the year ahead, but are you able to provide an exit rate from June 21 to give us an idea of what numbers look like, assuming 12 months ownership of the recent acquisitions?
Yeah, I think good question. I think that probably that 50% pro forma margin is where we're at. JB, have you got anything you wanted to add to that?
I think we're almost going to answer a few of the questions, Simon. I think Nick's question, when we look at the exit rate of the organisation, you do have to add EEG. And as I mentioned, those numbers of 2.2 baseline revenue for EEG, and year on year, we've exceeded double-digit growth in the underlying AI media business. So that sort of organic growth continues. So adding those two influences together is pretty much where we're heading, exiting, moving to the new year.
Great, thanks. Follow-up question from Nick. I noticed you've named Amazon and Facebook as customers in your slide deck. At the start of your IPO journey, investors were a bit concerned that Megatech might eat your lunch with their own ASR. Can you talk about what sort of work you do for Amazon and Facebook?
Yeah, absolutely. That's a great question, Nick. And I think this slide, number 31, really highlights exactly the offering. The out-of-the-box ASR is what Amazon and Google and many other companies have. And for a lot of situations, that is good enough. But for situations where you require a degree of confidence, frankly, that what is being transcribed or translated is accurate in the sense that it conveys the importance of that information to people consuming those captions or translations, it's just not good enough. And so what we do is we effectively are layering on the algorithmic custom dictionary with our basic automated Lexi service. We're adding human curation to those dictionaries where that higher level of confidence is required, and where almost complete certainty is required. That's when we deliver our AI Live premium service. The really interesting part, and this can't be understated either, is that those two particular examples of Amazon and Facebook, we are doing translation for them. And when you are moving from speech into text, and then you're moving from one language to another language, the errors multiply. So if you get the wrong word in English, then it's obviously going to make the translation many times worse than it even appears in English. And so getting that fidelity and getting that accuracy in multiple languages and doing it live, that's really what those customers are coming to us for.
Great, thanks, Tony. Next question from John Polinelli at Morgans. Hi, Tony. Congratulations and well done. Great result. You mentioned that gross profit margin for the year was 42%, up from 39% last year, but you actually finished the period closer to or exceeding 50%. What drove that increase at the end of the year? Should we expect 50% maintained this year?
We should expect more than 50% going forwards as we continue that shift away from services towards the SaaS business lines that we're focusing on growing. The increase from last year's number is also a result of a lot of the migration from the legacy ACS, Caption IT and Caption Access platforms onto the AI media technology platform. And it's also as a result of further investments, many of which we made in the first half of FY21 to improve the automation of that core AI media platform. And certainly we continue to invest in that platform as we will continue to invest in those SaaS products going forwards.
Great, thanks, Tony. Another question from John at Morgan's. With regards to the acquisitions made this year, in particular EEG, what has been the customer retention or churn been like with those businesses? Also, can you please talk to the cross-selling of AIM legacy products into their client base and vice versa?
Oh, absolutely. So we haven't lost any customers since we've acquired the EEG business. And in fact, we secured the NBC Olympics deal off the back of the cross-sell. So that required Smart Lexi, which was not something that the EEG team had. And the success of that means that we're now targeting that EEG customer base for upsell into Smart Lexi, which are some of those minutes, those 5.1 million minutes in US broadcast that are not currently captured by Lexi. So we're certainly seeing upsell and cross-sell from EEG customer base, just as we're seeing upsell and cross-sell from the AIM legacy business. And really critically, where we're just seeing new customers being won with the one-stop shop offering.
Great, thanks, Tony. Question from Alex McLean at Bell Potter. Can you give us an update on the margins in the ACS business, both from a transition to the premium re-speaker model and uptake of the new SaaS products?
It's difficult to actually unpick that now because we've fully integrated the ACS and the AI media business. So what we're seeing is more and more customers moving across to the re-speaker model. And what we're also exploring now, and we haven't launched this yet, is moving the EEG products into the enterprise space where we can begin to sell those SaaS products. And that's something that we will be expecting to report positively on in the first half results of FY22.
Great, thanks, Tony. A follow-up question from Alex. What percentage of total revenue do you see SaaS revenues exiting FY22?
JB, I'll throw that one to you.
I think it's a difficult one to answer because a lot of that is leveraged off our growth of both the EEG product suite and the overlay of the existing businesses, Tony. We do expect it to grow quite significantly. And as Tony said, where we exited the year is just the start of the journey.
Yeah, and I think, giving a bit more flavour to that, Alex, we'll continue to report on that. And it's going to be a key metric of success as to how quickly we can increase that 8%. And so that's definitely going to be a key focus.
Thanks. Is the company forecasting additional acquisitions in this financial year?
Can I answer that, Tony?
Yeah, go for it.
It's been a delight doing the 3 that we've done this year. No, sorry. On a serious note, having the cash does make it. It gives us the appropriate means to make acquisitions that are technically prudent. But Tony, you can answer from where you think we'll head on the acquisition path.
Oh, look, EEG was, we looked at commencing the process towards listing on the ASX at the end of 2019. And at the end of 2019, one of the reasons that we looked to list was access to capital and access to acquisitions in what is a fast consolidating market. In that independent analysis that we did, EEG was top of the list in terms of acquisition opportunities. And frankly, Daylight was second. And off the back of that, we then also had the great fortune of meeting Phil Hissong from ACS several months after that. And we saw what a great fit the ACS business would be with AI Media, given the incredible success that they had in the US enterprise space, and where we could also see value in applying the AI Media technology platform across to that. Phil himself had made 4 acquisitions in the lead up to selling ACS to AI Media, and he had another 2 that were in the offing, and those 2 were Caption IT and Caption Access. So they were very much bolt-on acquisitions that afforded us some really interesting assets. Caption Access has a very, very strong presence within the disability community. It's a deaf-run organization, and Caption IT had done some phenomenal stuff in terms of bundling their offerings and services with third-party providers. Those acquisitions are now fully part of AI Media, and with the transformative EEG acquisition and the one-stop shop it's affording us, we're not seeing a lot of gaps in our ability to go to market and deliver customer value with the product set that we've got in FY22, which is not to say there aren't companies on our radar. And you know, the EEG process was a sell-side mandate that kicked off just a couple of months after we listed. So as JB said, we will continue to be opportunistic in terms of, you know, where we see a strategic fit. But I think it's more likely that we will be looking at acquisitions in FY23 and beyond.
Thanks, Tony. Final question. Were you EBITDA positive in the 4th quarter? If not, when do you expect to be EBITDA and cash flow positive?
Yes, we were. And yes, we expect to continue to be.
Great, thanks. And just another question has come from Ken Behrens. Very funny. Can you confirm Smart Lexi ASR is incremental to AI Live? Should we expect growth in services revenue into FY23 when considering revenue mix on slide 32?
Yeah, look, we're expecting all of those product lines to grow. We're just expecting the SaaS product lines to grow more strongly.
Great, thanks, Tony. That concludes the Q&A segment. I might hand it back to you for closing remarks.
Thanks, Simon, and thank you all for joining. Very happy to meet one-on-one. It's been a very, very exciting first year, and I think we've positioned ourselves very well for growth into the future. I do want to thank my board, who have been absolutely terrific. Really great counsel through this listing process. We actually had 21 board meetings over the last 12 months, which included obviously getting ready for the IPO and the acquisition, and look forward to sharing the ongoing journey with you over the years ahead. Thanks very much.
Great, thanks, Tony. Thanks all.